Good day, trader. Stacey Burke from Stacey Burke Trading. Today we're talking about what type of day is it. Lots of questions regarding inside days, the templates, the day counts. We'll be reviewing basic approach to the market. We have 3-day setups, 3-session setups. Important to study the consolidations. Large moves come out of consolidations. We talked about this in previous videos. Rectangles, ways to look at which pairs may be setting up for the best trades within that day itself. May have larger day 3 setups. Different pairs will set up differently and have different day counts in terms of the 3-day setups. So not to confuse anybody, but important that you know where the high and the low of the week are and what day it is from that high or low. After you've had the consolidation, we'll look at the types of days and ways to easily filter out pairs that may not be set up as cleanly, and then pairs that are, and whether or not they have peak formation highs or lows inside of that consolidation. That can give us a thesis heading into the next session that we're trading. So for me, I'm trading the US. Asia London is always the first go-to chart template that I look at to filter out which pairs may be setting up the best for a session scalp or a larger range, high of day, low of day, high of week, low of week opportunity. If the market is already moving, what to do? And in many cases, those are charts that I will typically avoid unless they are at a previous day's high or low setting up on a third day. That can be a very lucrative reversal opportunity if it's setting up as a squeeze. And then within those consolidations, is there a break in structure, higher highs or lower lows? That can help us determine when the market breaks to one side, whether or not that is a stop hunt for a reversal, a dump and pump, or similar for the pump and dump back into a peak formation. So for example, we had a nice short trade off the high of the session in the US off the British pound off double zeros. London had put the peak formation high in for the day at that point. So that was a pump up into the double zeros. The first 15 minutes locked it in and reversed, and the second 15-minute cycle began and started to collapse, giving us a great opportunity above 75 for a move of 50 pips back to the low of the day. Then also, if there's days that have news, that will also affect our ability to potentially get into a market until after the news. But if it confirms our thesis, for example, if it's a buy low opportunity and the market is already moving heading into the news, we would be looking for a first bounce in the direction of that trend or a continuation trade in the direction of that original move without getting in front of the news itself. The best setups will come out of consolidations. Really important to understand that the sideways consolidations allow the markets to build up order flow, and those trade opportunities typically will explode and do range expansions. When the market has already ballooned out in the Asian and London session, typically that can be when it chops back and forth inside of that high and low, or it may set up a low and high within an extended range that gives a sell high setup for a move back through the low, extending that range again, and vice versa for the long trades. These are different than squeezes, and we'll take a look at the charts just in terms of the basic model for consolidations. Now, typically an ideal opportunity is when we have Asia and London in a consolidation range. It can vary in terms of the size of that consolidation, but in most cases on most of the currency pairs, that will be roughly in the area of a 25 pip box. Not to say that the range itself can't be higher, but it'll roughly be in a consolidation of a quarter level. Sometimes that can be 50 pips, which you've heard me say I like to look for 75 pip opportunity. If it's 2 levels, then obviously the market can have a peak formation in London. We may have a peak formation in Asia. That's formed our consolidation. The market may have come down in London, pumps up, back up into the high of the day for a move back down through the low of the day. We can have a market that is on day 3 and we've established our high and our low, and the market has broken down inside. We've already got our M structure, and it proceeds to break down and blows off for a measured move of that consolidation in the downward direction. But the days where these ranges extend out, in terms of we could have Asia and then London up here, these are harder to read, but typically, again, you've heard me use the expression, they're on the front side of a move. Now, there are different variations of this, because on day three, we can have 3 levels of rise that coincides with the market locking in a high, and then London's higher low, the US puts in a peak formation high and breaks down and rolls over for an explosive move. That will typically be on a level 3, day 3 type of situation. But when we can mark off clearly defined consolidations, this may often give a buy-low setup in the London session that takes the market higher. So the low of the day comes in London, but that initial consolidation is there. From Asia, we can get the same thing where Asia puts in the high and the low, and London then auctions up and puts a peak formation high in and rolls over and does a measured move of this range again times 2. We can see a large move in London that keeps going and then offers a lower level continuation trade in the US that sort of peters out and doesn't do much, where the large move itself came out of the London session. But often the best opportunities will come when we have a narrow, well-defined range that we can see clearly. I encourage you to go and look at your own charts, but when you can identify these consolidations and also know your day count, this can help you identify the opportunities clear. For example, we had a nice tight consolidation on day 1 Monday last week heading into the London session. Then the day 2, the Tuesday, the market came down and consolidated down in the lower level. So peak formation low that the market traded back down into in the US window. And you hear me say this, first hour will often put a high or low in place, or both. In this particular case, they traded back down into the low, and we had low-hanging fruit inside that the market traded back up to, and at the New York Open exploded back through the high of the day on day 2. So we had day 1 longs, the biases to the upside, the creeping trend. The market breaks out of the Asian range, so the market continued to drop lower in Asia and then was extending the range in London and then the US. And the next day again, we had a nice tight consolidation heading into the London window. The market breaks down in London, and as I mentioned, this is the lower third leg of that move in the US session, and then the market goes back into consolidation again, third day from the high of the week. We have an Asia and London consolidation that eventuated in an explosive trend trade, well, reversal trade, but the trend coming out of that consolidation on the news candle, going back through the high of the week. Now, I also want to point out something, because there's still some traders who are struggling with the concept of the day count and what that means. So if we have a day 1 that's broken to the upside, we have day 1 longs in the market. They've come out of consolidation, and day 1 longs are in the market. They broke the high again at the close, heading into the close on the Tuesday. We have day 2 longs in the market. So we break out, not just a little pop through the top, but they break out, clearly taking in breakout traders into the market. They then come down on the inside and take out the low of Tuesday on the inside. Now this is our new high of the week. Day 1, day 2, day 3 pulls back inside and stops out higher level breakout traders who may have had their stop at the low of day 2. The market then proceeds to go into consolidation on Thursday for the explosive move back through the high of the week. That is our day 3, our third day to the high of the week, taking in the third breakout traders for the third time. Now, these traders were stopped out. We can begin our day count again on this new breakout. And on Friday, we had a lot of traders who asked me about a reset. This is an example of a reset. On Friday, we have a new day one breakout. On Thursday, we go and continue to go higher. We continue to go higher after day three breakout instead of a reversal. The explosive reversal comes on Thursday, and we get peak formation low. So coming back to identifying what type of day it is, has the market put in a lower high of the day heading into a session? Can you look at the market on these other consolidations and determine whether the higher low is locked in for the day? Clearly, on this particular day, we have 3 pushes down into the low and the explosive move up. On the Wednesday, we have 3 pushes into the high. Thesis would be then peak formation high in London, that the high of the day may be locked in. The reason why that's important to understand is that when you come to the US session, if you're trading this market, we want to be trading in line with the peak formations. So the market has broken down. If you're trading in the US, you would only want to be shorting. It's already come out of the consolidation. But when we come to Friday, we have a market that has come down first into the peak formation lows that have formed into the close. So again, looking at the closes of markets, this day extends down and goes into consolidation and then reverses. This day puts peak formation lows in and closes into the extreme. So a great question from a trader, are the closes important? We're gonna talk about that in a future video. The closes are very important. It helps you identify whether or not anybody is trapped who is positioned at the close or late in the session or holding on to a winning trade or a profitable trade. Clearly today, right off the bat, we have a gap, and traders who are short at the close of Friday on the British pound have been underwater for the entire day. And traders who were in profit have been unable to get back above that high water mark where the closing price was. So where they were originally in profit, perhaps from the breakout of Thursday's high, you'll notice that the stop hunt comes back into the high of the day from Thursday, which is again the reason why I chose to exit this trade that I shorted in the British pound. But we have this possible reset, which coming back to our original topic, does not allow us to form a nice tight consolidation. The market has moved higher. When we head into the US session, we have a consolidation, but it has now been formed in the London session. We have the higher low that takes out the high of the day in a nice consolidated range. Now, coming back to understanding the difference from the euro on Friday, a lot of traders asked me what the difference was, why I didn't take the euro, why I chose the pound. And again, I'm looking for tightly consolidated markets because when I go to my shorter time frame, I can identify then whether or not there is a pump or a dump type of scenario. This is clearly a market that is still in breakout mode and trending. It is not in a consolidation or set up for any sort of three-level stop hunt. Although the pound had put in a low of the day and a possible reset, so again, the reset, they've gone down and put in a peak formation low heading into the end of the week. This may be our new day one, Monday, day one for the week, but day two in our 3-day cycle. I won't know till tomorrow. We could see this market move higher again and taking breakout traders into the market at the high of the week. But important to understand the consolidations. When a market is in this type of pattern and it's moving higher and not in a nice tight coil, there's a high probability that this up move will continue once it reaches the low of the session. Higher highs, higher lows. Although this was an ideal candidate for a stop hunt into this low-hanging fruit, higher level longs chasing the open of the market, perceiving this to potentially going to be an explosive move, that was ripe for low-hanging fruit for a fast 50 pip move back through the low of the session. Today, an example where we are underneath of the closing price. Asia puts in a high and a low, and London stays inside of that range until breaking it and reversing. So there's our false break reversal possibly. the market comes back down to the low of the session, and then right into the beginning of our 12, just prior to our 12 candle window, we see the nice little pump up. When we look at our 1 minute chart, we can again see our nice tightly consolidated market in Asia set a high and low within a 3 level of rise and fall range, 75 pips. We have a market now that has potentially put in a high of the day at this time, a peak formation high. The peak formation is up through the high of the day and breaks down and reverses. Then we get our pump up into the first 15 minutes of the US 12 candle window. We had a lower triple top that formed our lower peak formation high of London at double zeros. And then this market breaks down on the inside. And as the second 15-minute candle opened and started to fall, that was a ripe candidate for me to short this market. Thesis being back to the low of the day. So the most important thing I want to emphasize about this trade is not so much focusing on the little bars, but paying attention to the time on the clock. 15 minutes locked in the high of the session after hitting the stops and reversing off the lower triple top from the London session. As the second 15-minute candle opens and starts to push up and break down, I'm in the market. It's about timing of the clock. Once this is locked in and the new 15-minute bar is starting, I'm getting into the market. You've heard me repeat this. I'm getting in. I'm putting my stop in above those peak formation highs, and that's it. Targeting minimum of that lower swing low that started the march up. That's the beginning of our pump and dump. The thesis is that this should at least go to that level and potentially could go to the low of the day, but we were sitting on top of Thursday's high of the day breakout from Friday. We'll zoom in on that to back it up. We can see that level right here. So had I wasn't looking for anything fantastic, but this was an easy pump and dump trade similar to Friday's pump and dump trade on the pound. Again, we don't get 3 levels, but we've already got a 3-level box. They've locked in the high of the day. They've hit the stops. We have a 50 pip range back through the low of the day, a zero stress, easy session scalp. Similar on Friday, we were in an upward moving market, but we had our consolidation for the London session. They put in a higher low. We have a 50 plus pip box that this market can potentially trade back through. The first hour puts a high in place and then proceeds to put a low and work back and forth. The second hour opens and broke down. Very similar setup, just at the high. London put the high in today. The US session puts the high of session in place in the second hour for an easy 50 pip collapse. And again, you'll notice the low hanging fruit, the ramped up volume caught up high. That's a dead giveaway for this short trade back through to the low of the session. The euro is a good example of where the market put in a high and low in Asia, broke through the low of the day and reversed prior to our 12 candle window. This now, different from the pound, has put in potentially a peak formation low. They haven't broken any other boundaries. They've pulled back inside and then traded back down into that low in our 12 candle window into the New York Open. Now, some traders bought the low of the day, continuing the long trend at 75 in the gap just prior to the US window. Excellent trade. And then this market has just again crept up. Day one Monday, we haven't broken any other levels. We are day 3 in the move from the low of Thursday. And now this market potentially, this could be a reset itself. I don't know. I have no idea what this market will do. We've had a fairly large move. We still have stops on the daily chart above 68. And this market, if it was to break structure, we could be on the beginning of a short side on the back side of this move up, or even for a 3-day setup back up through the long direction. No idea, don't care. But the difference is that this market broke out and pulled back, and coming back to studying the consolidation. So if you're trading this in London, some traders may have looked for the short trade up high, no breakout. Asia puts in the high and the low. They break out and reverse, false break reversal, similar to the pound, except the pound did it up top and then traded back up into the high in a 75 pip box for a 50 pip move back through the low of the session. So again, we have a nice consolidation. They've broken out and reversed. Some traders have perceived this to be a short trade back through the low of the day. They've been caught down low for the explosive reversal in the New York Open, taking out the high of the day. A few traders messaged me. They nailed this crude trade. Great example of a market that has a high of the day in Asia, comes down and puts a lower high in before breaking down and then coming back inside in our Europe-London window. There's our high, there's our low. That's our consolidation. We have a market that is potentially now locked in the high of the day above 50. This is West Texas. And then broken down, made a lower high and a lower low. They've gone vertical in London and put a peak formation high. And now remember, we're coming to the screen in the US session. The peak formations are up. Peak formations are up. They've given an M structure and broken down. This now is our break in structure. We have a market that has made a lower high and a lower low. We have a break in structure on the inside, and they continue to go lower. This market puts in lower highs, peak formation highs on the way down. We're in a 100 pip box. The first hour puts in a high. Peak formations are up. The second hour comes down and puts peak formation low in place. We have volume now potentially trapped down low. They reverse this market. The third hour opens. They go into consolidation underneath the high. Remember when I said they go sideways without taking out the high or the low of the session or the day. They are coiling for an explosive move. This is a parabolic setup for a 75 pip stop hunt back through the high of the session and also into the lower peak formation highs and the breakout traders from the M structure in the London window. They hit the stops, and you'll notice we're at the top of a 00 box. Now, some traders' numbers will be different depending on their broker and whether it's spot crude or West Texas. But this third hour now, first hour puts in a high, second hour puts in a low. There's our rectangle. They break out, they hit stops. This breakout starts to run out of steam. 45 minutes into the hour, it breaks structure and pulls back inside of the breakout high. Again, the breakout high from this lower peak formation high in London. The new 15-minute candle opens and it pops up and pushes back up into our collapsing market. We now have our little triple top and a mini pump and dump for the collapse and the short trade all the way back through the low of the day. This is a range expansion on the downside. Two full expansions that completely went back to the previous low of the day. This is a 3-day pump and dump that began on Thursday. We had breakout traders in the market on Friday that broke out of Thursday's high, and again there was a gap where those traders were still in the money. So whenever you have a gap and they keep going higher and holding it higher with the break in structure, and Friday night they go up and put peak formations up into Friday's high. Consolidation high and low in the first 2 hours of the US session that stop hunts up into the peak formation M structure from the London session before reversing, giving us our engulfment on the 15-minute chart. Again, timing, end of the hour, end of the third hour, timing. Timing is critical. New hour opens and collapses through previous day's low, hitting stops on the breakout traders. And again, the nice tight consolidation. You'll notice that this entire London, US, Asia, London window is one large consolidation itself. So I talk about this larger boxes. Everything's in a box. A pair I don't talk about a lot, but used to trade, and just watching it again, the spreads can vary on this pair, but also trades offers some great trades in the US session, but another example of where these nice tight consolidations will form for explosive moves around previous days' highs and lows and within the session itself. When it's inside of a high and a low and it's an inside day, look for one side to be broken and be giving the peak formations prior to heading into a new session. That's the giveaway of the directional bias. That rectangle then potentially can be an expansion of a range. We can target the previous day's low in this case once it breaks that level, or just the consolidation itself as a potential area for where these trades have the room to go to. When they consolidate down on day 3, day 1, day 2, day 3, high of the week from the previous week, going lower day 3, a consolidation at the previous day's low, heading into the US window. Asia, London forms a consolidation with 3 pushes for a nice explosive move all the way back up towards the previous day's high. Today we go into a consolidation again. We get a little consolidation, higher high, a break in structure down low, and then a move up again into the high of the day before breaking down in the London window. So we get our break in structure on the inside, break in structure, and then that's the simple A-top setup heading into the New York Open. Similar to oil, this pair will track to some degree with some similarity to oil. So often you can look at maybe the Canadian dollar or the Mexican peso to give you an idea of potential directional bias on oil if it has a very similar setup. This is a very clean setup today. Peak formation, the A-top pattern after they've locked in the high of the day. So again, thesis is that the high of the day is locked in. We have a peak formation at the top of our consolidation, and then we get our vertical stop on headed into the New York Open for an easy, no stress collapse through the low of the day. I just want to talk about Pound New Zealand for a second, as it was a textbook perfect template today. I didn't trade this, but another trader was tracking this and told me about it, and I took a look at the chart, and I just wanted to show traders this is a perfect example of a template for a high of the day opportunity. We have a market that's broken out of the Asian range out of the consolidation right at the Europe-London window and gone vertical up through up to the high of the day. Now this pair, the spreads can widen quite a bit. I can get 5, 6, 7 pip spreads, which is why I don't trade it anymore. But this template itself will show up on lots of different pairs. We have our high of the week, day 1 on Thursday. I'll just highlight that. Day 1, day 2, a similar 3 peaks consolidation for a nice high of day opportunity in the US window on Friday. And then we get 3 levels. We have a consolidation that breaks higher and goes 3 pushes to the high of the day in a broken down market on day 3. I emphasize to traders to study these templates. So when I get, people who have come along and watched a video, they don't know what they're doing, and they go, well, how did you see that? And all this stuff. They don't understand these are template textbook setups. High of day, Asia sets the high and the low. They go vertical, 3 levels of rise past the consolidations at level 1 in a 100 pip box. They go up to double zeros. The market puts in a high in the London session and then goes vertical back into the high. First 15 minutes, false move back into the direction of the high before collapsing and locking in the double M structure for the short trade at the high of the day for well over 100 pips, no stress, easy. High of day, 3 levels, 3 peaks, trade setup. Take a picture of this, screenshot this chart, put it into your file book, your playbook, but this is a textbook perfect high of day, day 3, 3 levels of rise for the high of day, no stress, collapse trade. This is an absolutely perfect trade setup. So hopefully you got value from today's video, traders. Master the consolidations. Understand that these consolidations are what will help you identify whether a market is set up for an opportunity whether it's distended and still on the front side of a move, or trending and not the ideal candidate, or if you want to be trading this long. So just to before we finish, an excellent question from a trader: why didn't I want to go long? We'll zoom back to that. Great question. So number one, the thesis is that this market will return back into the long direction. We had news, and then we had the engulfment, and there certainly was an opportunity for traders to go long. We're on the third day of a large move in a strongly trending market. But the question I always ask myself is, if we just looked at the pound New Zealand, we see the opportunity for a potential collapse vertical market to go right through the floor. With this pair on the euro on Friday, this is a trade where, again, the directional bias is right. Not too sure how much size I could put on that. We're on the third day of the move. We're on a Friday. This market could have came back up to the high and just gone into consolidation or traded sideways. It continued to move higher. That's not my trade setup. My trade setup, if we were going to be taking this, would have been to short that. Now, I talked to the difference why I chose the pound over the euro, but the euro still went 50 pips from high to low. Traders had the opportunity, again, just timing-wise, second 15-minute candle, the market engulfed. You're looking 30, 40 pips with zero heat. Even in a distended market, there was a decent trade there. But the ideal candidate for me was the pound, because it was in a consolidation with a vertical stop hunt to the high of the day that collapsed back inside and went straight back through to the low of the session. So study the consolidations, recognize if you can tell if a high or low of the day potentially may be locked in. If it's locked in, your thesis can be potentially biased in one direction. If it's a nice ideal setup, if they've locked in a level similar to New Zealand and then gone vertical, again, the question is this a pump and dump setup, or are we in a trending market? And there's a difference, as you can tell. The market's trending on the euro. We have a pump and dump opportunity on the pound New Zealand. This was textbook perfect. Thank you to the trader that shared that with me. Keep it simple, traders. Have a great week. Keep it simple. Start off strong, and may the markets go with you.